So let's get in some levels then. Sacchitanand Uttekar joins in for a quick technical check on the market. Sachi, your thoughts at this juncture where we are seeing all the rallies being sold into?
Good morning, Mangalam. Mangalam, clearly the texture is on sell on rise, and this is what we have been adhering to. We continue with the view that the level of around 18,060 should be achieved, and probably today we may see those levels getting established. So clearly, if you look at the Nifty, 5 and 20 crossover has been established at 18,440. So unless we don't see a swing above 18,440 on a positional basis, we don't see the overall texture to be changed. So clearly, the way Nifty has slipped below its previous day swing low, we don't see an immediate support before 18,060. So we continue with our bias on the negative side. Even right now, the opportunity is to create fresh short positions. The trailing stop loss from here on should be placed at around 18,240 when it comes to spot level. And we are expecting a move towards 18,060 before the expiry settles somewhere close to 18,000 or 18,060 itself. Okay. When we look at BankNifty, it has still managed to sustain above its previous day swing low, which is placed around 42,360. But the kind of data we are seeing right now, we feel that probably there could be a swing towards 42,000 eventually. So even here, some shorts can be placed. The stop loss should be placed at around 42,760, and an intraday target could be placed somewhere close to 42,100.
Okay, point taken. By the way, a couple of stocks which are at the day's low from the Nifty pack. We have NTPC, Tata Consumer also at the day's low, L&T, BPCL, Titan, ITC2 is in focus, and we have a lot of pressure coming in for these IT stocks as well. So something like a Wipro and Infosys also at the day's low. Also ICICI Bank is something that is seeing a lot of pressure in trade today. But Sacchitanand, any individual technical picks that you can talk about?
Well, since the outlook is on the bearish side, we prefer fresh shorts in when it comes to cement stocks, especially Ultracem cement. If you look at the weekly structure, the stock has already declined below its 5-week exponential moving average. If you look at the RSI on the weekly scale, has already given a negative crossover. So psychological support of around 7,000 was breached yesterday, and probably we may see a follow-through action continuing for the next couple of trading sessions. So right now we are recommending fresh shorts here for a target of around 6,800. The stop loss should be placed at around 6,990. The second counter which is on our radar is Escorts. Again here, for the last 3 weeks we have seen distribution signs. If you look at the immediate level of 2180, which was its 5-week exponential moving average, it has breached below the same, and we are expecting that the daily chart flag breakdown which has been exhibited, it is giving us a target somewhere close to 2030, which is also coinciding with its 20-week exponential moving average. So fresh shorts are recommended even in Escorts. The stop loss should be placed at 2165 for a pattern target of around 2030.
Okay, all right, Sacchitanand, thank you so much for joining us and taking us through your technical picks as well. It's time to shift focus to our special segment where we'll get you a few ideas